Now let's talk about metals. Gold is losing its shine again. Prices of the precious metal have tumbled to a near 3-week low, wiping out some of the massive gains made earlier this month. Spot gold slipped below the $4,000 per ounce mark today, its lowest level in nearly 3 weeks. That's after the metal had touched a record high of over $4,380 earlier this month. So, what's really happening here? Well, let's start with why gold prices were so high in the first place. Over the past few months, investors rushed to buy gold as the U.S. China tariff war rattled supply chains and threatened global growth. Gold became a safety net, a store of value when everything else looked risky. But now, as signs of a truce emerge between Washington and Beijing, investors are breathing easier. On Sunday, top negotiators from both sides outlined a framework for a trade deal. That's set to be discussed further when President Donald Trump meets President Xi in South Korea on Thursday. When tensions ease, investors feel less need to park their money in gold, and that's exactly what's happening now. The second big reason for the drop is profit booking. After gold's massive rally this year, some investors are simply cashing out. They're taking their profits while prices are still high, especially as festive demand begins to fade. Then there's investors' appetite for risk. When optimism returns to global markets, investors tend to move away from safe haven assets like gold and towards riskier ones such as stocks. That shift in sentiment from fear to confidence naturally pulls money out of gold. The next big test comes this week, with major central bank meetings lined up. All eyes are on the U.S. Federal Reserve, which is expected to cut interest rates again. Now, here is the interesting part. Gold usually benefits when interest rates are low because returns from saving accounts and bonds tend to shrink. If the Fed signals on Wednesday that this could be the last rate cut for a while, that could further weaken gold's outlook. The European Central Bank and the Bank of Japan are also meeting this week, and both are expected to keep their rates steady. So is gold really losing its charm? Well, not quite, as precious metals are known to be volatile. Even with this correction, gold prices are still way higher than what they were at the start of the year. Gold prices have gained about 44% this year alone. The precious metal is up around 5% this month, and the metal's long-term appeal as a hedge against uncertainty, inflation and volatile markets remains intact. But in the short term, gold may see a few more choppy sessions.
6% drawdown on Monday or Tuesday, whatever it was, does not concern us in terms of the long-term thesis of having something that is a store of value against debt that is going to be the most likely scenario.
And it is not just gold that is facing the brunt. Other metals, including silver and platinum, have slipped too. The real question now is, will gold find its footing again if the U.S. China deal falters? Or has the world's favourite safe haven finally lost some of its shine in calmer waters? Either way, one thing is certain. In markets as unpredictable as these, gold may fall, but it never stays out of the spotlight for long.
Want the facts?
The latest developments?
News that gets straight to the point.
Well, we've got all three just for you. This is Firstpost Live, a brand new show, your window into what really matters.
Don't miss it.